Good evening, everyone, and thank you for joining us in. We have amidst us for session 8, Introduction to Startup Finance, Abhishek Verma. He holds a BTech from Magad University in Electronics and Communication Engineering and an MIB in Finance and International Business from Delhi University, and a certificate in Advanced Valuation, Banking, Corporate Finance, and Securities Law from the NYU Stern School of Business. He's previously worked for Vertex Data Science, Infosys in the financial services and insurance management domain, was a management consultant, and also was part of the Accenture strategy team, and has co-founded Ibanker.vc, which uses AI and big data to raise startup capital. Thank you for accepting our invitation and joining us. And here, over to you, Abhishek.
Thank you, Karthik. Thank you for the intro. So I think you have made my job easy. And without further ado, I think we can start for today's session. So the session is more about the nuts and bolts of finance, and how finance helps in understanding a business, and how finance helps in actually helping startups grow and survive and also thrive in the current environment. So I just wanted to understand from the participants, and you can just type down, or I'm not sure if there is a poll, like how many of you are students, how many of you want to have a startup? Do you have an idea? So can we have like a quick, if you can chat, if you can just mention A, like what is your qualification, and B, like do you have an idea for a startup, and so on.
I think about 70% are students, and the rest are aspiring entrepreneurs. So this is designed mainly for tech students or someone from a non-finance background.
Okay.
That's the basic understanding, but yeah, I mean, we could take some.
All right, good. Okay, yeah, so I think tech students is an interesting lot, and somewhere I had read that if people understand that what you are building or what you're making, then you are too late in the game. And I think that applies for technology for sure, right? So here's what I'm going to do. I'm going to take a annual financial statement of a company, and then we can see how to make some business sense of it. So how to actually read a financial statement. So I don't want to get into the theory of what is a balance sheet and what is a cash flow and all. I don't want to bore you guys. We can start with a financial statement, and we can see, how does it make sense to understand the business. So let me just share my screen. I have downloaded a financial statement, and I can see some comments. We have a mechanical engineering student. Then, yeah, good. We have aspiring entrepreneurs, so that is good for India.
Abhishek, the polls that you have asked me to create are ready. Whenever you want me to launch them, let me know.
Okay, so let's launch it right now. I think we'll give 2 minutes, and meanwhile, I'll share my screen so students can answer the poll right now. The first poll.
Yeah. Folks, we've just launched a quick poll to understand what stage of the startup are you at. Are you at like an idea stage? Are you like at a MVP stage? Or are you like, have you got a product market fit? Or have you already got customers who are on board your particular startup idea? So if you can mention that, it'll help us curate this content better for you. Nisha, there is a quick poll. Just select an option from there. It will help us evaluate. Anyone who has not voted, if you can quickly vote. Perfect. Abhishek, I think we are set here. You can continue, Abhishek. Are you able to see the screen, Abhishek, the poll details?
Not yet.
I'm just sharing the results. Are you able to see it now?
Yes, yes. So I can see that around 75% of folks have an idea, and around 20% are at the MVP stage. So that is really good. And I see that at least one person already is seeing some traction. So great, good to know. So I think at an ideation stage, the key thing is to have a sense of who your target customer is, and what is the value proposition that you are providing to that customer. And if you're solving a problem for that customer, how can you standardize it and reach out to more customers like that? And then you will have a sense of your market, you will have a sense of your revenue, and you will have a sense of your customer acquisition cost. And that is going to give you an idea of how big the market size is and how profitable the business would be. So those are like two key things that any investor looks at. So if you are at an idea stage, it is very good. And I think you should have multiple ideas at this stage. You have the freedom to, look at multiple ideas. So yeah, so as I was saying, here is something that I have downloaded. So this is the profit and loss statement for Facebook. I chose Facebook because it is something that most people in this world use now, right? So around 3 billion people out of 7.5 billion are using either Facebook or WhatsApp or Instagram on a daily basis, right? So it is one of the most powerful, it has become one of the most powerful software in the world, because it has so much of data, it knows what people are talking about and so on. So if this company is so powerful in terms of analytics, in terms of data and so on, how much does it make money? So let's look into that, right? And this is the annual, actually the quarterly statement uh, of Facebook, which I have downloaded right now, just prior to the call. Uh, yeah, and this is the latest quarter, which is March 31st, 2020, right? Uh, and prior to that, it was December 31st. So as you might be aware, so every year has 4 quarters and every quarter has 3 months. So Jan, Feb, March is, which is the last quarter for which they have published the results. If you look at it, first thing is that December, in the quarter ending December, the revenue was 21 billion. That is billion with a B. And in the March quarter, the revenue was 17 billion. So actually the business did not grow. And we all have a fair idea of why the business did not grow. That is because most of Facebook's revenue comes from we can yeah, you guys are free to answer on the chat, or like any sort of question that I ask, you can just answer it. So yeah, so I was asking what is the main source of revenue for Facebook? And okay, so let me answer that. So it's mostly advertising revenues, right? Uh, it's not only from businesses, but also from large businesses, from small and medium businesses across the world, from people who are having a personal business, who are running it from home. And as we know that Jan, Feb, March was when the Corona pandemic hit. The revenues of small and medium businesses went down, so they cut down on advertising. And we can see that Facebook's revenue has suffered by at least 3.5 billion here, right? And you can see that is this is the unique thing about software, that if you look at the cost of expenses, it has not gone down as much as how much the revenue has gone down. And if people would have, and that is the beauty of a software, of a technology company, that if, let's say that tomorrow people, the net number of users is, let's say 5 billion out of the 7.5 billion, you can see that the revenue would increase, let's say by 50, 60%, however it is growing, but the expenses would still be the same. It will only be a marginal increase, based on the number of servers and so on, but the rest of their cost would by and large remain the same. And that is one of the speciality of a technology company. So if you see, the increase in the total cost and expense is very, very less, right? So let's look at, as you can see that this is not a PowerPoint presentation, so I don't want to have a monologue. I usually, so I'm a pretty hands-on guy with, when it comes to business analysis, when it comes to forecasting, when it comes to valuation. So hence I've kept it a pretty much, hands-on learning for this session. So let's look at the quarterly growth in revenue, and accordingly the quarterly growth in the costs and expenses. So by the end of this session, I want you guys to, around 75% of you have an idea. I want you to see who are your potential competitors, right? And I want you to look at their financial statement and see that how they have grown, how they have, what has been their trajectory to a product market fit, to a scalable solution. How did they grow? And how you can do better than them. What are the things that you can learn from them and beat them at their own game? So yeah, let's look at the revenue growth. So this is 12% for the June 30, which is the last year, actually 12 months back. And then the next quarter was a slow growth for them, which is 5%. Then it was a 19% during the Christmas time, during the holiday season in the West, in Europe, in UK. It's usually holiday time, so people spend a lot in advertising, and you'll see even homegrown businesses like cakes, candles, and organic, all sorts of creams, etc. You'll see that they are advertising through Facebook, and this reflects that during the holiday season, people buy and gift it to other folks, and hence there is a increase in revenue for Facebook. And let's see at this quarter, as I said, it was a degrowth, and they have degrown by minus 16%, right? So this is one of the analysis. Now, I would want to see that why is this 5% low, right? Because for a company like Facebook, it is growing by double digits every quarter. So why is this 5%? So one of the things that I can look at is there a seasonality in the products of the company? So what do I mean by seasonality? So are there some products which people do not use at a certain time of the year, right? So for example, the sale of, let's say, woolen and sweaters and all is seasonal, right? The sale of air conditioners is also seasonal in India. So let's look at what happened in September 30th of June 2018. And you can see that there again, okay, so we do not have a data prior to March, so let it be. But you can see that the data that there is a seasonality, right? So in the time period of July, August, September, the growth has been very less. And one of the reasons is that people go on holidays at this time. So, as they say that Dukan is closed, the shutter is closed, and hence the growth is less. This happened in September 30th, 2018, and it also happened in September 30th, 2019. So this, what I'm trying to show it to you is, how you can relate it to your own idea, or you start looking differently at companies, from a business side. That, okay, so, so something like this happens, that a company which is growing at 10% for a quarter, it may or may not grow at that speed, right? But at the same time, what happens to the expenses? So if I copy the formula here, you see that the expenses are growing by 8%, then 14, then 29, then 4, then it has gone down, then it has gone up, and then it has gone down. So by and large, expenses uh, are actually following a zigzag way. But actually, typically we do not look at costs and expenses. This is not really the metric, like how much are your expenses growing. One way to look at the expenses is, which is the industry followed way, that how much are your expenses of your revenue. So you can see that 60%, so their gross profit is 40%, right? So if, and it is in their expense are increasing or decreasing. So what happens is typically that if they are hiring a lot, or if they have offloaded a team, so then that expenses go up and down. Typically, I think if you look at cost of revenue, so it has gone down. So for a quarter, which is June 30th, 2019 to September 30th, so you see these two costs have gone down, right? Rest are by and large same, and then general and administrative cost has gone down. So Facebook somewhere, it has cut down the costs on general and administrative costs. So some of the example of some of those costs are actually, paying to third-party vendors, and also, for example, if they are arranging for certain sort of, let's say, employee benefits. So those expenses, it has reduced, and actually it has reduced it by quite a bit. It has gone down, so from 4 billion to 3.2 billion, and then 1.3 billion. So it has actually reduced a lot of G&A. Sometimes it also happens is that the services are not reduced, but they might have standardized or have a centralized vendor. So then also the costs go down. So yeah, so as I was saying, the income from operations, this is your revenue minus cost and expense. Guys, if you have any questions, please feel free to ask. Please feel.
So we do have a question.
Okay.
So Simon asks, even though companies cut down on advertising, but the number of active users have increased in this pandemic. So how does this increase translate in the numbers?
Right. Yeah. So that's a good question. Even if, so the way, see, the Facebook has users. So so these users are actually people who consume Facebook on a daily basis, right? And then how does Facebook generate revenue? So these are people who are actually putting advertisements, right? So these are small and medium businesses or large businesses, or then there are political parties, like, so let's say Republican, or even the Democrats in the US. So they pay Facebook a lot for their campaigns. So these are some of the ways in which the revenue goes. Now, what happens in a global, one of the in this unusual once in a lifetime case, like a global pandemic, people are staying at home. So what happens? Their usage of community apps grows. And what are the kind of community apps that we can see? So one is, let's say, we already have Facebook, then we have Instagram. Then you can see that in India, actually, a lot of companies, they actually started using WhatsApp for, even, so for example, B2B companies were using WhatsApp, RWAs of apartment societies were using WhatsApp to communicate, if there is, if they are getting vendors, grocery vendors from outside. You can see that TikTok had, it actually grew so much. You can see that Zoom grew so much. So what is happening is that the users are growing, right? The users of these apps are growing, but are they making, is Facebook making money out of them? So that depends on this segment, which is the people who give business to Facebook. And in this time of pandemic, that has been very less. So if I am a small and medium businessman, and let's say that I do, it's a business on uh, courses, or maybe, it's a restaurant business, and I know that the restaurants are not working. So let's say I make some delicacies or cakes and so on. So I know that that business is not going forward, right? Because it's a lockdown. So I'm not going to advertise on business, and that is reflected here. So while the network of Facebook might be increasing, the number of users might be increasing, the people who are advertising on Facebook are not increasing. So this is still, I think 50% is good news for Facebook, that it is still, people are still depending on its products. People are still depending on Facebook, Instagram, and WhatsApp for their, I would say, existential services in this global pandemic. Like imagine if you don't have WhatsApp, right? So people are actually using this, but they are not advertising so much. Does that answer your question?
Right, sir, I think it does. Yes, sir. Absolutely.
Okay.
So we have another question, sir.
Mm-hmm.
So this one says, I've prepared my MVP as a technology guy. How
Mm-hmm.
do I, what are those factors that are required in the finance statement to execute the product?
Right. So this is really good if the MVP is there. So I would say that at the very start, your idea, the idea is very fragile, right? And you need to protect that idea. So you don't need to get into these complex financial statements. For you, there are just 2 to 3 things. You need to first, you don't need to think of finance right now. You just need to see that what is the problem that your MVP is solving, right? And who are your customers? So if what is the problem that your MVP is solving, and who are your target customers? And if you have answered these 2 questions, if you have identified who are your target customers, let's say that it's a tech solution, let's say that you are providing uh, a marketplace, or you are providing let's say so these, just the other day I was reading about milk delivery. People have apps for milk delivery, right? So then the target customers are let's say houses, apartments, maybe restaurants, and so on, right? So if a particular problem is being solved, so then you have to do 2 things. One is you have to find out what is the price of your service or a product that a customer is using. So let's say that is 100 in dollars, let's say, right? And how many transactions anyone is having. So let's say that it's maybe once a week. So that makes it 200. So if you have one customer, you are making 200, right? Then what is the cost for servicing that customer? So that might mean that your server charges, or your AWS, your hosting, and so on, your product build. Maybe you have an intern who is doing some work. So that may not be attributed to just one service. So let's say that there is a lump sum amount of 10,000. So that means that to be profitable, you need at least, and let's say that this is your per month, and this was your per week, right? So to be profitable, you need at least 50 customers in a month, right? So the moment you have, and even if you do not have 50, if you are actually solving a real problem, uh, and the customers, you feel that they are actually realizing that the problem is being solved and they are coming back to you. So that is a stage where your product market fit is going to happen, where people are going to come back to you to get that problem solved. They're going to keep coming back to you because you have a better solution. So the moment you have this, then then that is a time that you need to look at the economics of it. And typically the economics is that you look at the cost of everything. So you can just have a simple list of, you know, what those costs are. So as I said, so it is about hosting, it is about product development. Then you should attribute an opportunity cost for yourself as well, right? So let's say that if you were working somewhere, or something, if you were providing, if you were doing a course which would have landed you a better job, right? So there is an opportunity cost. So to be objective about the market potential of any product, you should keep these, you know. So this opportunity cost can be your salary, right? And so if let's say that this is the cost and you are getting 100 customers, so you know, and this is your so this is your revenue. So these are the sort of numbers that you need to look at. So you need to actually look at what is the cost of development, what is the time when you will reach product market fit, and what is the cost that will be required to prove your product market fit. And then what is the cost that will be you need, what is the capital that you need to reach to an early growth stage, right? An early growth stage is that after you have reached product market fit, you are standardizing your solution. You are going to, maybe, you know, right now you are in Bangalore, maybe you want to test that in Hyderabad or somewhere else, right? So that is your early growth stage. And this is a time when if you want to keep it within yourself, it is fine. But if you think that it requires more coordination, you need some mentorship, then you can go to investors, you can have an angel round, you know, you can get some initial money, and that is how the story builds up.
Right, sir, right.
Okay, cool. So yeah, broadly, we saw this, right? And then, so this is the entire business expense. The rest are interest expense. So you can see that now Facebook has a lot of cash. So if I don't know if I have the cash flow statement and the balance sheet. Balance sheet has how much cash a company has already in the bank as fixed deposits, as securities, as stocks and shares. So you can see that their interest income is 311 million, right? And in the US, typically the interest rates are only very less. It's at least 4 to 5%. So you can imagine that the amount of cash that Facebook has at its disposal, it would be running into billions, right? And then, so this is added because this is an income here. However, they might have taken debt, or the markets have gone down for some reason. This is an expense. So the Jan, Feb, March month for Facebook was not very good, because A, their revenue has gone down by 16%. B, their expense has shot down from 58% of revenue to 67% of revenue. And C, their other income from interest has gone down. So from a positive 311 million, it has gone down to minus 32, right? So quickly we'll see what is the overall net profit after tax. So this is 28%, and last quarter was 35%. So Mark Zuckerberg would be answering a lot of questions, right? I think, yeah. So I was trying
sorry to stop you there, sir. We have another question coming in.
Mm-hmm.
Yeah. So this one says, what are the different types of financing options that a startup has, or once you have a product which is ready, what are the next steps or the options that are possible?
Okay. So financing options are quite a few. See, it depends on how much finance you need, right? So it depends on where you are in the journey and how much capital you need. Let's say that you need 10 lakh, then that can be funded by family and friends, right? if you have, let's say, a group of 4 to 5 friends, and you let your friends also come on board, so everyone can pitch in, or your family or your rich uncle can pitch in. So typically this is the uh, first wave how people reach out to fund their company. And this is, and at this stage, where if you are looking out for more than, let's say, 4 to 5 lakh, then you should at least have a very, very concrete idea, or you should at least have a product market fit, right? So at some stage you should have that sort of conviction that yes, this has been proved to a bunch of people, and now I can take it. And that is how you sell it to your family and friends. Then the second one is the angel funding. So angel funding is that when you reach out to some HNI, high net worth individual. So he or she can be someone like, let's say, someone who has already made, he has money, who invests in startups. So typically, you will find such people in the news. So let's say that, Binny Bansal, right? Binny Bansal is from Flipkart. Now he has quit Flipkart. He has made a lot of money. Walmart bought Flipkart, and Binny, he is investing in a lot of startups. So he or she might be interested to just give, let's say, 10,000 USD, right? So that means that is how much? 8 lakh, right? So he can actually, and he can actually give money to startups or any idea that he feels that there is potential. So there are people like Binny, then there are people like Rajan Anandan. You can find a bunch of them in Angel List. Then there are syndicates. Then there are, if you join any accelerator, they can also fund you if you're trying to develop the product market fit. So some of the good accelerators are Y Combinator, then there is T Hub, then there is Startup Leadership, SLP. So you should check these out. So these are angel investors. Now, after you have reached product market fit, so these people are in the entire spectrum, and they are very particular about what stage they are investing. An angel investor is very particular that he wants to invest in the early stages, because he wants to diversify the risk. So if he finds that an idea is good, it has worked in, let's say, London, so he'll be like, okay, let me give 5 lakh. And because he only wants to part with 5 lakh, he is not going to invest in, let's say, Flipkart, because that is already a mature company. He would want to, invest in a company which he thinks that can grow, right? So that is the gamble that he's going to take. With less of money, he would want a higher return, like 3x or 5x, and he would want a 15 lakh return in a couple of years or in 3 years, and so on. Or he might say that I want a further right of investment, right? So he can say that when the next round of funding happens, then I want the right to invest further. So that is one. Then the third in the value chain is venture capital. Venture capital are there is another one which is called the seed round. Seed round is when your initial product market fit is done, when your early growth is done. So this is the time. Now this and Series A are quite interlinked and overlapping, because the amount of funding that is happening is increasing. So earlier, like 5 years back, the average seed round was 200K. I'm just I don't know the exact figure, but I'm talking about US. And today the seed round has multiplied by 4 to 5. Earlier, the Series A used to be like 1 to 2 million. Today it is around 5 million. So the amount that is being invested in these rounds are increasing. At the same time, there are only few startups which manage to raise that much of money. So in the value chain, you have seed round. They are going to invest and make it gain a lot of traction, gain a lot of scalable growth. And once that happens, then you go to Series A. Series A is when there are big players like Sequoia or I don't know, Excel. These are some of the venture capital companies who would come at this stage. Then there is Series B, and then a company can go to IPO, which means that they can be listed in India. They can get listed in Sensex, right? And yeah, so typically this is the way that a company grows. If you look at in India, I'm not there are companies which have actually been listed, but this is actually the evolution of how a company gets listed. And at times what happens is that they can also get acquired or acqui-hired, which means that they hire someone or they merge with other startups. So, and this can happen at any of the stages. Okay. Any other question?
Perfect, sir.
Cool. So, okay. So I think we started at 6:30, right? So I think we are already 45 minutes. So any questions on this profit and loss? I want to wrap the profit and loss, and I want to show you something that I had worked on my blog, and I want to show you some of the analysis to let you guys have a real feel of what exactly, how the companies compare and what exactly is the real value. So let me do that. But before that, let me close this P&L statement of Facebook. So the last thing that I wanted to show is the overall percentage for a tech company, right? So I think I've already done that. So this is 35%, 29%. Let's look at an average for last 12 months. So this is, so average for last, I think 15 months is 26%, and overall, I think 28%. So Facebook is actually, cutting down on cost to keep its margins intact, right? Because it is listed. So if you see, Facebook has actually gone the entire length and breadth of this journey that we were talking about, right? So as family and friends, it had those. If you guys must have seen Social Network, right? So it raised money from Eduardo, right? Then angel funding, it went to Peter Thiel, it went to uh, the guy who had I'm forgetting the name, but the angel funding was done by it will come back. But and then it went. Then the seed round was when it had actually relocated to LA or Silicon Valley, and then it had raised money, and then Series A happened, and then in around 2007 or 8, I'm not sure, it got listed in Wall Street, right? So it went through a similar kind of journey. Okay, so let me share with you something. Are you guys able to see my screen right
Yeah,
now?
absolutely, sir. We can see that.
You can see the value equation?
No, sir.
Okay, so let me just share my screen again. Okay, so are you able to see now?
Now
Yeah.
we can see the value equation, sir.
Right. So see, this is these are 4 companies that I have compared across, and these companies are not in the same industry, right? So Facebook is the largest network platform with 3 billion people. Amazon is the largest online retailer. in terms of users, it has 156 million prime customers, but of course the number of users for its grocery business would be higher, I think. Netflix has, it's a streaming entertainment service. It is across 190 countries and 183 million paid membership. And then we have an automobile company, which is actually the most valuable company now in the world. And it, yeah, so it's again a very different industry. If you look at the number of users, it would be very less, right, in comparison to these, which are very high, which are in the range of billions. So Tesla would be hardly, I'd say, very, very less in comparison. But let's look at the revenue. So Facebook yearly revenue. So these are yearly numbers. So if you look at the revenue, you see 70 billion is the revenue of Facebook, because it is mostly earning it through advertisement. Amazon, it has now, now you know that there's a term called Amazon, right? It goes into any industry, it just blasts it. So there is a quote by Jeff Bezos that your margin is my opportunity. So the moment he sees that there is, in any industry, there is a margin, he can get into that. And so far it has 3 different industries. So one is the grocery store, where it is head to head with Walmart, and actually it is way more than Walmart, especially in the last 6 months. Then there is Amazon AWS, which is their cloud infrastructure services. And then there is the Prime streaming, where it is competing with Netflix and Disney, etc. So there are 3 major different kinds of business segments, and you can see the revenue. So what Facebook is earning in a year, Amazon is earning in a quarter, right? And Netflix is 20 billion. Again, so people are watching Netflix. No one wants to watch Tata Sky and so on. Tesla is 24 billion. But look at their margins. A company like Facebook, so we just saw the 33-35% is their margin, right? For Amazon, it is 5.2%, despite having better profits from AWS. Its profit is still less. And Netflix has 12.9%. Again, it's a streaming service. It is producing its own content, so its margins have gone down. And just look at Tesla. Tesla is the most valuable company in the world. It has just broken even, right? Just last month. So until last so many years, Tesla has not been profitable. But look at the amount of revenue. Look at the amount of the fan following that Tesla has, and the expectation that Elon Musk has built about clean energy and sustainability, and about going to Mars and so on. So yeah, so these are the operating numbers, 23, 14. Now, another thing that I wanted to show is that the money that is being made, Facebook is making more money than Amazon, right? So despite Amazon, billing more, like 4 times more than Facebook, the beauty of this marketplace that Facebook has, of it is actually earning more at the end of the day. It has deeper pockets than Amazon, right? So that is the beauty of a tech company. Amazon is it might be it might be a tech company, but it is in reality, at the end of the day, not all of its processes are tech, right? Because there is Amazon logistics. People are providing same day delivery. Then there is a grocery. Then there is warehousing. Facebook has no such problems. But Facebook has its own problems. Facebook has a privacy issue that it has to take care of, that it has to pay. Facebook has antitrust allegations across Europe and in other countries. So Facebook has its own expenditure, but from a business to business perspective, Facebook seems like a better business, right? I say seems like for a reason. We'll see further. And operating income is 80. So what I want to say is that operating income is not the end of the story. So this is what we read in schools and colleges, that how much profit are you making, right? But that is not the end of the story. How much salary are you making is not the end of the story. How much are you saving is the end of the story. How much cash you have is the story. That is, if you have to take out, if you have to take away one thing from this session, it is that this is not the story. Cash is the story. Cash is king. And I'll show you how. So, okay, so tax, everyone knows. Operating income after tax, you know that net of this is tax. Then there is capital expenditure and depreciation. So again, these are theoretical topics, but what I want to say is that capital expenditure is when a company is investing in plants, property, equipment, let's say servers, etc. So Facebook has invested 15 billion in servers and plants and Facebook offices and so on. Amazon has invested as much. Most of these investments would be in warehousing, etc. Tesla opened a new factory in China, but now it has opened in California and so on. So 1.4 billion Tesla has, 253 capex for this. So maybe Netflix has invested in studios and in producing some dubbing studios. If you read their annual statement, you'll come to know. Depreciation means that how much of this loses its value over a period of 1 year. Let's say these are like maintenance costs and all. So how much do I need to pay to maintain this? So that means that let's say that, okay, I'll give you an example to just explain depreciation. Let's say that you bought a MacBook, right? And that was for 1.5 lakh. Now, if you are running your business with the help of the MacBook, and a MacBook has a useful time of 5 years. So that means that in the first year, you have used 20% of 1.5 lakh. So in your business profit and loss statement, you have to show that this is an expenditure that you took. But this is not the amount of cash that your business has used, because cash has gone 1.5 lakh, but 30,000 of it in form of a software or a hardware like MacBook is used to run your business. So that is what is called depreciation. We typically we reduce it from capital expenditure. It is a notional amount that is used for accounting purposes. So net of capital expenditure and depreciation is net capex. Then there is account receivables, account payables. Account receivables is the money that you are expecting if once you have delivered the service. So account payables is the money that you give to the vendors. Again, I want to give you the basics of, I want to show you a business finance view. And that is why I'm not delving deep into this. We can discuss this for half an hour, but for now it is not of very use for you unless you are a CA or unless you are appearing in an accounting exam. The part that I want to show you is, this free cash flow that I was talking about. So from my operating income, if I take out the capex, if I take out the net working capital, then this is the cash that I have in hand. So what I'm trying to say is that, let's say that you had, you made a revenue of, let's say 20 lakh, and you made a profit of 5
Sorry
lakh.
to stop you, Mr. Abhishek. We have a question on that line. It says, my operating profit is around 10 lakh. How can we calculate the depreciation?
So depreciation is actually not calculated on operating income. It is not a function of operating income. It is a function of capital expenditure. So again, if you looked at Facebook, its expenses were the same, even if its revenue or operating profit was increasing or decreasing. So let's say that if your operating income is 10 lakh, but you are still using 3 laptops, 5 servers, maybe you are using one office, maybe you bought 10 chairs and so on, right? Now these things have a life. Now in the first year, if they have 10 years of life, uh, and then let's say that you spent 5 lakh to get these capex, right? uh, which So what goes into capital expenditure? Anything that goes beyond a quarter for a year or so goes or more goes into capital expenditure. So that's a broad thumb rule. So let's say that you invested 5 lakh for capital expenditure and these things you bought, right? And if it has a useful life of, let's say, 5 years, that means that every year you are using 1 lakh of these services, because after 5 years you have to buy this again, right? Even if you don't buy it, you still have to account for that money. So if the useful life is 5 years, then 1 lakh is your depreciation. So then your net capital expenditure will be 5 minus 1, that is 4 lakh. So in your operating profit, you will uh, reduce this by this. So yeah, so to answer your question, it is not a function of how much profit you're making. It is a function of your depreciation is a function of how much capital you have spent and what is the useful life, and accordingly, how much is the money that you need to take out because that useful life has been served. Is that clear?
Absolutely, sir.
Okay, cool. So, and then as I spoke about working capital, see again, working capital is in the balance sheet. Uh, Now, what happens is if let's say you're providing a service to a company, then you need to build that company, right? Once you have built, so maybe in Jan, Feb, and March, which is the first quarter of the year, calendar year, if I earned a revenue of 20 lakh, but I have billed the clients, but all my money has not come in. So now if you see, PNL was only till here, but now we are talking about, so this is balance sheet and this is balance sheet. And then we find out the cash. So this is the way a company gets valued, like how much cash you're making. And so what I was trying to say is, when it comes to account receivables, you have theoretically you have made a revenue of 20 lakh because you have billed it. Some of it might come in April, March, or some customers might not pay you. So how much of it comes later is shown by 1931. So if you see, the account receivable shows that how much is the company taking an advantage of, how much is a company taking in advance, right? So a quick reflection of this is, see, uh, Amazon is making 280 billion, right? That is quarter of a trillion and more, but its account receivables is 4 billion only. So what does this mean? It means that Amazon is taking an upfront payment from its customers. How does it do that? It's Prime customers. If you are into a 12-month subscription of Prime, Amazon has already taken 12 months of revenue, right? You are already, so to speak, stuck with Amazon, and and it has to pay very less to you, right? So if you see, account receivables means that the money that it needs to pay to its customers, which is very less. And then let's look at account payables. These are the suppliers. So let's say all those suppliers which are at Amazon, what it says, you give the product at the warehouse. I will pay you when the customer has ordered, when the customer has delivered, when the return policy has expired, only then I will pay you. It flexes its muscles like that. And as a supplier, if a supplier wants to reach out to more users, more customers, it is not going to say no to Amazon. So this is how it arm twists the small and medium suppliers, right? It withholds their payment. So this is reflected. So this is why, a group of numbers can tell you the story, right? At the end of the day, this is like a group of 10 different line items, but it will tell you the story. It will tell you the ethos and of a company. Inventory, Facebook, Netflix have no inventory because they are tech companies. There are no CDs, nothing like that. Amazon, because of its groceries, has inventory. Tesla has an inventory, and hence the net of these is your net working capital, which is again reduced from your operating income. But you see that these are negative, which means that even though it is making 5% profit, it is generating cash already. And it is generating cash how? By taking an upfront subscription from users like you and me, by withholding payment to suppliers. It is generating 15 billion in a year, which means that it is generating 3 billion in every quarter, irrespective of whether it is being profitable here or not. So you see that this is the real story. And hence you see that even though Amazon is making lesser profit than Facebook, at the end of the day, its cash is higher, right? And because its cash is higher, it can use this cash to do anything. What do I mean by that? Let's say that Amazon wants that it let's say that it wants to get into logistics. Now, if you look at logistics market, there are three players. One is FedEx. I'm talking about US. And there is UPS. Now, if you go and see, their stocks have gone down, right? Amazon will say that I will buy their shares. So what happens? No competition, right? So this is what happens with, and what happens with the share. So it has not done that, but people realize the importance of this cash, and hence you will see its market cap is 1.1 trillion, right? Facebook's market cap is 500 billion. It is still halfway. The business is not profitable, very less profitable. Grocery business hai, right? Very less profits, but the valuation, the market cap is high, right? So if you are looking to, now what does it mean for you? What does it mean for startups? What does it mean for everyone? It means that for a business, the most important thing is how much cash you generate. So that is all that I wanted to say. Any questions?
Perfect, sir. No questions as of now.
Cool. So yeah, you can reach out to me on LinkedIn.
Let's maybe look out for a couple of minutes.
Okay.
Abhishek, just to add, I have a question here. So most of the students now are going to be preparing for a pitch deck to present it for incubation as well as for investment. So in that case, what are the different financial elements should they focus on when they are presenting it? Since you've already heard that most of them are in the idea stage, right? So what are the different numbers they should look at, and what are the different elements they should focus on with that?
Right. So I think what they should look at are 2 to 3 things. One is that how much are how much is the number of users? So if you are getting traction, then that traction is proven by how many users do you have. So I think you should create a simple table which says that how your users are growing. So let's say 100 in week 1, 200 in week 2, and so on, right? So this will say that there is a demand, right? Second is that what market are you operating in? So then I would want to see that what is the size of the market. Is it into thousands, or is it into millions, or is it into billions? And so if I know that there are users, and if I know that the market is big, these two are the main thing. Then we can look. Then third is how much is the operating margin, or how much is the profit. Why is that important? Because if you are a high margin business, you can reinvest that to get more users, right? And what is this operating margin consists of? A typical breakup would be that people would look for customer acquisition cost, and some of your standard costs like tech cost and any hiring that you have done and so on. So according to me, these are 3 to 5 metrics that anyone is going to look at.
So, Abhishek, so we also, so we call ourselves a civic tech incubator at, at IMACX and IIITB. And what's your thought for, there are some for-profit social enterprises or what do you say? I mean, how is that measured? So some part of the social impact is substituted for some of these factors, or how is it?
So if I understand correctly, you're saying that there are for-profit social startups, right?
Yeah, so some of our startups are in this range, what you're talking about. We also look at startups, who can create maybe a social impact. I mean, like impact investing. So what does an impact investor look at?
See, yeah, that's a very good question actually, because impact investment. When you talk about impact investment, the modalities change because it is about reaching out to a villager. It is about providing, let's say, hospital services to a place where medical facilities have not reached yet. So when it comes to impact industries, so there are 3 to 4 different industries. So there, uh, this is good. Like you should anyway have this to show not only that you are reaching and impacting people's life, but also to show that the team is the right team to do this, right? So one of the things that anyone who is going to give money is that, it's called the founder fit, right? So if you are the, even if, and you would have seen cases like, people, they may say that the founder may or may not be right for the job, which comes later. But what I'm trying to say is that even if they are investing, then they look for that these guys, they have this expectation that these guys are going to execute it the way they have planned it. So now when it comes to social and impact industries, one of the things that happens is that there, you can, if you're talking about raising capital, you can raise it from uh, different government bodies, right? Because they want a public private partnership. So there are a lot of government programs, there are a lot of state government programs that are run for these impact industries. Then there are CSRs that are done. And not only that, even actually PE and VC firms are actually becoming quite aware and quite active. So even if it is not profitable as of now, I think that if these impact industries are really making a difference, then what they do is that they bring their own expertise. So one of the things when anyone is raising capital is that you should look for smart capital. What do I mean by smart capital? You should look at the portfolio of companies that any VC or any angel investor is having, and you can see that what has been the evolution. Have they really executed well? Have they provided the right mentorship? Have they grown from a 500K to a thousand or a million or a billion over a period of 3 to 5 years? Have the founders in a good shape, or were they thrown out? Some of these things you can look at and say which which VCs are good. But overall, I think in India, there are quite a few, I would say there are a lot of ways in which these fundings can happen. Like Google has its own fund.
Yeah, Mr.
Facebook
Abhishek,
also
on
has it.
sorry to stop you there. On that note, there's a question from Shubham, which says, "So I belong to a middle class family who don't have a strong financial background, and we don't have the required property to be mortgaged. What are the ways that I can finance my startup?"
Yeah, so first of all, you should not think of mortgaging your property to
True,
so
true.
that's the first thing. See, if you have a product, you should figure it out in a way in which you are trying to feed that dream or feed that idea by either getting more. So first thing is that so the first thing is that, let's say that you have an idea, and uh, then, and if you have an idea, then that doesn't mean that you should jump with an investment of 2 lakh, 3 lakh, 5 lakh. Most of the founders, if you see, they are very scrappy, they are very resourceful. So you have to find out that what is it that I should do which proves my idea. So first is proving your idea. Prove and that is where you need to speak to users, you need to see their behavior, you need to just go and sit and see a user behavior. You need to have that somewhere in Excel, in a PowerPoint, in anywhere. You see what the user is doing, and then you validate your assumption. So you should have 1 or 2, 3 assumptions that this is what users are doing. If I and this is the bottleneck, and if I come here and I provide a service, then this is the value that I'm going to give to these set of users. And if I prove that with, let's say, even 10 or 100 or 1000, that is where the product market fit is done, right? So yeah, so first of all, I would say that feed your idea with all the information. And another thing that I want to add is that we all think that this idea that we have, this has come to me only. But if you look at the internet, you will find that a book has been written on it. And hence, you should look at what your, if that idea has already been put in place, and you will see that 99% of the time that idea has been executed, right? So you should also see how those people have grown, what can you learn from them, and what can you do better than them. But don't think of mortgaging. Any other questions?
I don't think we have any other questions. There is something on, sir, how to calculate free cash flow.
How to calculate free cash flow? You can calculate. So that is how actually a discounted cash flow valuation is done. As I was saying, that even if you are not profitable, you can still raise capital if your business is generating cash. To calculate free cash flow is a function of 3 things. First, you have your operating profit. Then, okay, let me just share what I had shared earlier. Uh, where is, yeah. Yeah, so this is the equation. So as I was saying, this is a function of your operating income minus capex minus net working capital, right? So again, for a startup, these are actually very little or very less. Customers, and hence you see that another term which we did not touch upon that comes into play, and that is EBITDA. So what does EBITDA mean? Earnings before interest, tax, depreciation, and amortization. So what does that mean? In this current context, this is the EBITDA, right? So as a proxy for cash flow, people use EBITDA because they know that startups may or may not have these. So now EBITDA is a double-edged sword. Uh, and it can be used. People can say that, okay, you are valued at, let's say that 5x of EBITDA. Then then an investor can say that no, let's go with 4. You see, going by just 5 to 4, he has increased his stake by, earlier it was 20%, now it is 25%, right? So that is the problem with EBITDA. the point is that the money on the table is of startups. Investors can say that they don't want to go by DCF. However, every startup should have a financial model. Every startup should work that financial model out to see how much cash it is generating. If not at the initial stages, at least when their product market fit is done. It brings clarity across metrics. It allows you to look at what are the metrics that you should look at. And it allows you to have a decent conversation with the investor. Otherwise, if you just say that, okay, I have a business, I have got 10,000 users, let's go with EBITDA multiple. You can still raise money, but you see, if you look around, you will find a lot of entrepreneurs they call serial entrepreneurs. And then there's another section where one entrepreneur has gotten a decent exit and he becomes an investor. So the difference is how much stake does one keep with themselves, right?
Perfect, sir. Thank you very much. So we hope you all had a very good evening. On behalf of the organizing committee, that is IMACX Studios, supported by Mighty Startup Hub, Government of India, and in association with Founders Card. And the audience, I'd like to thank the speaker, Mr. Abhishek Verma, for all the valuable information he shared with us today. It has been a great pleasure, sir. Thank you very much.
Thank you. It would be great if you can show some.
Just before we close, right? Just a quick poll that Abhishek had asked me to create. I'm sharing this poll with everyone.
Okay, yeah.
You can just...
And guys, show some love on LinkedIn, right?
So the question is, would any of you be interested in doing a short program with Abhishek on fundraising?
I'm not sure with me. Yeah, okay. Yeah, let's see.
So please share your LinkedIn in the chat. Thank you.
Okay.
Cool.
Perfect. I'm just stopping the poll now. Perfect, guys. Thank you. Have a great evening, everyone.
Yes. Thank you,
Thank you,
everyone.
guys.
Thanks, Abhishek.